Assalamu alaikum, everyone. I hope you are doing well. Today, we got an even deeper discount on a lot of our favorite names. And this is a good opportunity, I think, to add. And I like to take these opportunities not to just add blindly, but to remind myself of the thesis for why I bought a particular stock. And today, we're going to focus on Tesla. It is front and center in our portfolio. And so I think it makes sense to review our thesis for the stock and what exactly is a reasonable valuation for the stock. Is it overvalued? Is it undervalued? Why the massive fluctuation between close to 500 only a couple months ago to now less than 300? What's going on here? I'm going to tell you what I think, and you can make up your own mind and see if what I'm saying makes sense or not. So today we're going to talk about, as I said, the Tesla thesis. And instead of looking at next year or the year after that, let's look 5 years into the future in order to not be too caught up in the valuation that is justified by the business in the next 12 months, for example, or the next 16 or 24, but rather where we think things are going longer term. So what's a reasonable valuation for Tesla stock in 2030? First of all, let's take note of where we are. If we look at the last 5 years and we look at gold, for example, up 87%. S&P, for example, up 100%. Even after the dip that we got back at below 300 after knocking on the door of 500 only a few months ago, Tesla is still up 553% in the last 5 years. Not as good as Bitcoin, but still very impressive growth for the stock price. So when you're in doubt, as I always say, zoom out. Zoom out to appreciate the full picture of things. And what trips investors up about Tesla, I believe, is that they neglect the S curve that Tesla should enjoy. And by that, I mean, when you're at the beginning of this red line, and you're looking at the forward PE for the next 12 months, for example, it puts you maybe over here, right? But it doesn't put you on this steep part of the growth for the company. You really have to look beyond the next 12 months, beyond the next 24 months even, to appreciate the opportunity that Tesla presents. And this is why investors who don't really understand the opportunity are stuck looking at the next 12 months and saying, hey, if we're looking at the forward PE here, is the valuation justified? Is the price justified? There are a lot of other companies that are trading for cheaper. And it's only when you look beyond the immediate time horizon that you can appreciate the opportunity. So that's sort of lesson one, is that don't get tripped up by the S curve. This is how people end up really missing out on great opportunities. If we want to look at the near-term catalysts for the stock, I've mentioned them all before. You have the new Model Y that is coming out, and actually deliveries start in March. They're taking orders. Delivery starts in March for Juniper or the new Model Y. You have the hatchback. This is, by the way, not necessarily how it is going to look, but for illustrative purposes only, the new cheaper model that should be, let's say, 35,000, that should come out in the first half of 2025. You have the Robotaxi launching in June in Austin, and the extrapolation that we can do from that. You have the Shanghai Gigafactory that's going to start churning out mega packs, which are currently the highest margin product for the Tesla business. You have Optimus that is set to start rolling off of the production lines by the end of this year, and they've already actually started hiring engineers and staff needed for the realization of this deadline. So you have all these near-term catalysts for the stock, even in 2025. But let's look beyond that to try and see if we can find a reasonable valuation for the stock in 2030. And I'm going to sandbag a lot of these numbers in order to be ultra conservative. As PIF members know, I typically have a conservative base and bullish or optimistic price target for stocks. And if there was ever a stock where I would opt for a bullish target, it would be Tesla. But I'm going to go with the conservative target for Tesla. So I'm going to assume their output is 10 million vehicles by 2030. This is for their automotive business. Now, the goal of Tesla is actually 20 million. But let's say they achieve half that, and let's assume that their average selling price for those vehicles is 40,000 a piece. Right now, it's around 45,000. Sorry, that should be 10 million. 10 million times 40,000. That's 400 billion at a profit margin of 15%. It's a bit above the profit margin right now, but that's how things are headed, especially when you get economies of scale. And so the net income from the automotive business should be around 60 billion. Now, for the autonomous driving or robotaxi business, let's assume here that actually there is 3 million robotaxis in 2030 and $50,000 in revenue per robotaxi. That gets us to revenue of 150 billion. Now, the underlying assumptions here is that there's 50 cents per mile that is earned in terms of revenue. And now this is much lower than Uber's current $2 per mile. And we're assuming 100,000 miles per year, or around 10 hours per day of driving. Keep in mind, for the human driver, they may do around 60,000 miles per year if they're operating as a taxi. Obviously, with robotaxis, we're going to assume that they get more, miles driven per day because they don't need to stop for breaks, they don't need to sleep. So, but conservatively, we assume 10 hours per day, even though if you ask Tesla, they're assuming something like 15, 16 hours per day. At a profit margin of 30%, that's 45 billion net income from the robotaxi or autonomous driving. And I should also mention that the goal for Tesla is actually somewhere between 5 and 10 million robotaxis. We went with 3 million robotaxis by 2030. For the Optimus or humanoid robots, I assumed 1 million units sold or leased by 2030. This is conservative considering the goals of the company. Revenue per unit is 50,000. That's 30,000 that's coming from sales and 20,000 from service costs. And obviously, there should be a really high margin software component to that. And so if we multiply these two numbers, 1 million units, 50,000 annually, that's 50 billion with a profit margin of 40%. Again, this should be a high margin, very software heavy business line. The net income here is around 20 billion. We also have the energy storage. Now, this is growing like weeds. They really started only ramping up last year, and they had 10 billion in revenue in 2024. I actually think this annual revenue number could be really understated. They're selling everything that they can produce right now. let's assume that they are able to ramp up to 100 billion by 2030 at a profit margin of 25%. The net income is 25 billion. So if we add up all these different lines of business, we come out to total net income in 2030 of around 150 billion. Now, for the PE ratio, even though typically Tesla stock trades between 60 and 80 PE, it's very seldom below that. Sometimes it gets to 100 PE. But let's assume that the PE ratio tempers a bit, even though it actually might be a lot higher, um, considering I don't think the opportunity for things like Optimus or Robotaxi will be anywhere near saturation by 2030, and so still they'll be able to grow at a very high rate. And with economies of scale, they should have really strong margins and improving margins. So actually, maybe we trade at 80, 90 PE even 5 years from now. It's possible. Certainly, if you look at companies like Amazon, they've been able to sustain high PEs for a very prolonged period of time. But let's assume PE ratio of 40 just to be conservative. So with the net income of 150 billion times 40, we get to 6 trillion. Shares outstanding right now are 3.2 billion. I'm assuming here that shares outstanding is going to decrease. The reason why I'm doing this is because it has been the case that the company is producing enough cash to not only uh, pay its bills it's profitable, but also enough to cover its capex and then some. And its cash pile is just growing. So I don't see any need for dilution anytime soon. And in fact, there has been talk about buying back the stock. I actually am not a big fan of buying back the stock, but I think it's probably going to happen in the next 5 years. I would much rather the company continue to invest aggressively and grow aggressively. So if you take these numbers, 6 trillion divided by 3 billion, you come out to $2,000 per share. Now, right now it's trading at 290. So this is around a 7x. So to achieve a 7x in 5 years, you're talking about around a 50% compound annual growth rate. Now, if we assume that actually the PE is not 40, the PE um, is closer to 80, for example, as it has been for a long period of time, then you'd have to double that price target. So we'd be talking about a $4,000 share, more than a 10x opportunity from here. And that's just if we look to 2030 and we stop. Obviously, at 2030, people are going to be thinking, oh, well, what's going to happen in the next year, 2, 3, 5, right? And extending their valuations forward from that point in time. So this is what gives me confidence in. So this is, I understand this sort of back of the napkin math, but I think it's more or less as good as you're going to get with a 5-year outlook. And this also, I should mention, there are certain lines of business that were completely ignored. For example, insurance, in-car entertainment, the dojo supercomputer training that could become a business that other companies use, and other lines of business that may pop up from the main lines of business that Tesla is engaged in. So with all of that being said, my confidence level in this company remains extremely high. My conviction level in this investment remains extremely high. As I always say, ignore the noise, focus on the fundamentals. There's a lot of noise in the market right now. Every time the president opens his mouth, he throws a new risk onto the pile of risks that investors need to think about. But this situation, I believe, will not sustain indefinitely. Eventually, we will get clarity. Eventually, the level of nervousness around this new administration will fall, and eventually, fundamentals will win out. We just have to be patient and make sure that we're sticking to the truth, reminding each other to stick to the truth of the matter. With that being said, let's take some questions very quickly. Sales and stocks are. Uh, all right, interesting comment. Uh, Stocks are crashing faster than a 3-day coke ketamine binder. All right. Um, oh, bender, I think you mean. But yeah, never experienced that, but I'll take your word for it. Assalamu alaikum wa rahmatullah. Wa alaikum salam. Any relief soon? Well, another way to frame your question is, how long will this sale last for me to accumulate at these prices? And I think if you reframe how you're looking at it, inshallah, it will be much easier to experience. Hamid says, Salam, I hope you're doing well. Yes, my favorite miners are the ones that we have in our portfolio. You are correct. I understand, Safe, your concerns about Elon, but as I always say, we are invested in Tesla, the company, not Elon, the person. If tomorrow Elon, resigns as the CEO and says, "Oh well, I want to focus on Doge or do something else," and instead, I don't think that would take the company from comfortable to uncomfortable or vice versa. Hey, Salam Rashad, nice to see you. Thank you for moderating our discussions as always. Wraith, 1 UK says, Wa alaikum salam. Are you still expecting, Malik says, are you still expecting a dip of dips or shall I continue buying Tesla? I think dollar cost averaging into Tesla, assuming you have a long enough time horizon, is a good idea. Thank you, Rashad. You're welcome for all the updates. And yes, become a PIF member if you aren't already. When I have anything to say about discounts, I will say it. Musa says, Assalamu alaikum, Rakaan. Do you think Tesla stock will drop more? It's very tough to say. All I can say is that where it is trading at right now is very attractive. I still think that we could see a 7 handle this year on Tesla stock, given all those catalysts that I enumerated at the start of the live. And even if it doesn't get to 7 or a 7 handle, I think the next 24 months are going to be extremely exciting for this company and for investors and shareholders. So yeah, I think if you have the right time horizon, if you're convinced with what I just said about its prospects, then I think it's kind of a almost a no-brainer, I would say, at these prices. All right, so if you enjoyed this live, do leave a like. I'd really appreciate that. Become a PIF member. Until next time, make sure to take care of yourself. Assalamu alaikum and peace be upon you all.